Okay, so today we're going to talk about semaglutides and health insurance. I'm not a health insurance provider. This is not medical advice. This video is meant to go over the details of whether or not your insurance company will cover these semaglutides. Now, these semaglutides include popular medications such as Ozempic. Ozempic was really the first one. There are others now like Wegovy and Mounjaro. Mounjaro. And the other term for this name of this medication is tirzepatide, Tirzepatide. And typically these medications, these brand name medications, are very expensive. And when people go to the doctor, they get prescribed the medication, it's not always covered. So I'm here to talk about a couple of things. One, how much are these medications going to cost you, and what are the options for insurance if you want to get your hands on some of these medications? And also, what do I think insurance companies are going to do? And the two camps regarding this coverage. Some camps say that these types of medications are revolutionary and they can reduce costs across the board because they make people more healthy by reducing the weight of someone or helping someone avoid diabetes altogether. This will cause costs in the long term to come down. Others say these medications are just too expensive, and if too many people go on them, it's just too much to bear, and everyone's insurance rates are going to skyrocket, and there's no way these insurance companies can cover this. All right, so let's dive into these topics. The first thing I want to talk about is the pricing. So, wow, Wegovy is anywhere from $1,300 to $1,600 per month. Okay, and retail prices of Wegovy and Ozempic, both of these are semaglutides, and there's also Mounjaro. They can vary significantly depending on the insurance company and the pharmacy discounts, the pharmacy that you are picking up this medication within. Wegovy, the average retail cost is between $1,300 and $1,600 a month. Ozempic retail costs generally around $900 to $1,000 a month, and Mounjaro is typically between $1,000 and $1,200 a month. So this is a cost of around $12,000 to $15,000 plus dollars a year. So on average, these medications are going to cost your insurance company somewhere around 10 grand a year. And the reason why I say 10 grand is because insurance companies often negotiate discounts and rebates directly with the pharmaceutical manufacturers. And I would guess that these, by the time you add up the negotiated discounts and any rebates that they've negotiated with these pharmaceutical companies, I would guess that they're getting anywhere from a 20% to a 50% discount. So making it around, let's call it $10,000 a year for every person that goes on a medication like this. So we're estimating that the average insurance cost for these medications are somewhere around $500 to $1,200 per month. Many insurance companies have different formularies, and a formulary is just a fancy word for a list of medications that the insurance company has decided on ahead of time, and they will list every single medication that they cover on the planet that's approved by the FDA and which tier those fall into. And tiers typically are tier 1, tier 2, tier 3, tier 4. Tier 1, in general, are generic medications or the least expensive medications on the market. Tier 2 are brand name medications, and this tier is usually the second most expensive tier available. Now, generics can be in Tier 2 with most insurance companies. It depends on how expensive that generic drug is. So back 10, 20 years ago plus, there were several pharmaceutical manufacturers that went into the market and they purchased pharmaceutical companies, smaller pharmaceutical companies that had patents on generic drugs, or perhaps the only approved patent. So here in the United States, and one of the arguments for reducing the cost of medications in the United States is to reduce regulations in the FDA and other ways of approving medications, because it is such a rigorous process, and some people say it's corrupted or corruptible. And so back 10 to 20 years ago, there were a wave of companies that came in, and they're really investors, they're really bankers at the heart of it, that looked at the numbers and saw that there were several generic medications that only had one approval. So there were manufacturers out there, pharmaceutical manufacturers, that had generic medications that had been on the market for more than 7 years, but they didn't have any competitors. And these medications, in the view of the banker and the investor, was that if you limit supply and you have a good demand for a product, you can therefore increase the price. And if you're the only one that has the patent and the only one that has been approved by the FDA to provide this medication to the public, therefore you have no competitors and you can jack the prices up. So there was a wave of purchases for these pharmaceutical manufacturers, and there was a wave of increased pricing in generic medications that had been around a long time. So there the insurance companies were used to paying, let's say, $30 a month for a medication, and all of a sudden those rates got jacked up to 4 to 10 times the cost, because the market said, let's see what the market will bear. And because these medications are valid, they do cover valid conditions, and they were the only ones out there to treat those conditions, the insurance companies were forced to pay these higher rates. So many of them adjusted their formularies and also their tiers altogether. It used to be, about 10 to 20 years ago, we had also about 4 tiers, but they weren't called Tier 1, Tier 2, Tier 3, and Tier 4. They weren't so ambiguous. They weren't so generalized. The tiers were pretty clear. It was the tiers were generic, brand name, non-formulary, and specialty medications. And for the most part, that's still how the tiers are structured and organized. However, in Tier 1, we don't just have generics anymore. And Tier 2, we don't just have generics anymore. Generics are now in multiple categories across the tiers. So again, it makes my job harder trying to explain this to people. So I digress. Tier 2 can be generic medications, but it tends to be the second most expensive tier. And it was originally meant for brand name medications that are approved by the FDA and have been on the market for a little while. Tier 3 are non-formulary. Now non-formulary, or the third most expensive tier. Non-formulary, again, formulary is just a fancy word of the list of medications that are approved by the insurance company and have been placed within a tier. Now, what happens when said insurance company creates their formulary, and maybe they do it once a year, once a quarter, they review the formulary, and then a new medication comes onto the market. obviously that newer medication is not going to make it onto that formulary right away, and you may need it right away. So that third bucket is really built for drugs that are some of the most expensive drugs on the market, and many insurance companies place them in tier 3 when there are alternative medications that treat the same condition that are less expensive, or they're newer to the market. And usually when they're newer to the market, they're more expensive anyway. So I really like to think of tier 3 as the third most expensive drugs on the market. And tier 4 are generally injectables and specialty medications that the insurance companies are having a very, very hard time managing the costs of, and they throw it into the tier 4 bucket. And in that tier 4 bucket, oftentimes they require you to use their pharmacy. They usually have a mail order pharmacy like Caremark or CVS that you have to use that pharmacy. That also, it usually does some sort of a compounding, or they consolidate their sourcing of those medications to one area, and those medications are mailed out on a monthly or quarterly basis to patients who need those medications. It's a way of centralizing the supply chain and taking out the middleman in a lot of cases, and also controlling the rebates. So when a pharmacy fills a medication, not only can the insurance company and the pharmaceutical management company get a rebate from the manufacturer for selling their product as an incentive for selling their product, the pharmacy themselves can also get some rebates and some discounts. So it's a way of consolidating rebates and discounts to reduce the cost of the medication as much as possible. So for the most part, these medications do require a pre-authorization, which means that you go to the doctor, your doctor determines that it's a good idea for you to go on one of these semaglutide medications. They pick one, Ozempic, Wegovy, or Mounjaro, and they fill out a form to the insurance company stating your weight, your height, sometimes your waist circumference, which calculates your BMI. Insurance companies usually go off of BMI to determine, are you obese? Are you morbidly obese? Where are you on the BMI scale? And that usually determines whether or not they are going to approve you for the medication, or gastric bypass surgery, or some other sort of intervention on weight loss or controlling diabetes or prediabetes. Now, I'm going to go through some of these insurance carriers. These are not all of them. Please remember that many insurance companies are split up by state, like Blue Cross Blue Shield. There's Blue Cross Blue Shield of Texas. There's Blue Cross Anthem of California. There's, it's basically a bunch of smaller insurance companies per state that encompass Blue Cross Blue Shield in the United States. So when I say Blue Cross or Blue Shield or Anthem, it is going to be specific because they're all ran like separate insurance companies in each state. So please keep that in mind. This is just to give you a general idea of how insurance companies are managing these medications. So Aetna has HMOs and PPOs, and Wegovy and Ozempic are either not available or may require a prior authorization. But Aetna does list some of these medications as tier 2, which could mean moderate coverage with a copay. So Aetna, on some of these plans, they are listing this as tier 2, which they're considering a brand name medication. However, on the back end, when they require a pre-authorization, many of these insurance companies do have limits. Like I said, limits on the BMI. Many of them were requiring people to be obese in order to be approved for these medications, and many of them now are requiring the patient to be morbidly obese. With Anthem, Blue Cross or Blue Shield, most of these medications are listed as a non-formulary or tier 3, meaning they're not usually covered and would likely require a pre-authorization. These medications are not listed on the formulary. With most Anthem or Blue Cross Blue Shield organizations, and a prior authorization is required. We have Cigna and Oscar, and some of these medications are listed as a tier 2 or brand name medication, but prior authorization is still required, especially for weight loss purposes. HealthNet, Wegovy, and Ozempic are tier 2, meaning moderate coverage, but they would still require prior authorization. Kaiser Permanente, these medications are not on the formulary and would require special authorization. United Healthcare, some of these medications are covered under tier 2 or tier 3, depending on the plan and type of coverage, but prior authorization is required. So this is a handful of some major insurance carriers and what they are doing in order to cover this medication. Like I said, pretty much all of them are requiring prior authorization. And since these medications are new and primarily used for weight loss, so many of these people that are going or wanting Wegovy or Ozempic are focused on weight loss and not so much on diabetes. Diabetes is another one that many are using this to manage. Most carriers are being cautious about approving them. They often require prior authorization, which means that the doctor needs to provide information to the insurance company, and approval will depend on meeting strict medical guidelines. And you know what this reminds me of? This reminds me of gastric bypass surgery or any kind of gastric surgery aligned with weight loss. So it looks like many of the insurance companies are seeing it as a substitute for the gastric bypass. I would imagine that some of them will even end up requiring people to try medications such as this prior to us approving a surgery. So this is upsetting to many people that want the medication, that see it as something that is helpful for their health. I have run into many people who start taking a medication like this, start losing weight, and they are very, very responsive. I've talked to other people who take these medications and it makes them really sick and tired and they don't feel good on them. So there's two subsets of people that I have personally spoken with who love the medication, and then others who don't do well on it. For those who do well on these medications, I have heard, just again anecdotally, that their blood pressure is coming down, their weight is coming down, they're no longer pre-diabetic, their blood sugar numbers are coming back. They're coming off of other medications because of the weight loss. They're able to control their appetite. They're able to control their eating. They feel normal. They're coming off of other medications like mental health related medications for depression or anxiety. It is improving people's health. So there is a camp where people believe that if insurance companies incorporate this into their formulary and they're more liberal with covering this medication, that the long-term effects could decrease costs. And we should really look at this. Is this something that could potentially reduce costs if people are healthier? So we would, of course, I'm into fitness, I'm into health. I think the first line of defense is diet and exercise, the old-fashioned, boring way. However, some people need a boost. Some people need help. And I am of the mind that if people want to take medications, they should be allowed to put whatever they want to in their bodies. I think bodily autonomy is a very important topic, and people should be allowed to use peptides and these semaglutides, of course, as long as they're safe and that as long as the sellers of the medication have the ingredients that they're stating that they have in the medication. As long as there's no false advertising or anything like that going on, I think people should be allowed to use what they want to in their bodies. We can look at how could this help the industry, or help America really get healthier, because we all know that study after study shows America is getting more and more overweight every year. Study after study shows that children are getting more and more overweight every year. We have I believe it's over 2/3 of the population now who are more than 50 pounds overweight, and many are pre-diabetic or diabetic. Some are pre-diabetic or diabetic and don't even know it yet. And that's very dangerous. Diabetes is an extremely serious disease and can be costly to the quality of life to the individual, and can be costly to manage for the household and also for the healthcare system. So arguments for these kinds of medications are, hey, if people want to take them, if they want to lose weight, let them take them and help them reduce the costs of and the burden on the healthcare system. So how expensive really is it to manage diabetes? And let's talk about some of the things that maybe people aren't thinking about, maybe insurance companies aren't thinking about. So if you prevent or delay type 2 diabetes, there are costs, obviously, to insulin and other long-term medication treatments. So there's costs in medication and long-term treatments, blood glucose monitoring systems, and insulin. If someone is overweight as a result of diabetes, because once someone has diabetes or prediabetes, there's obviously insulin resistance, and there's all sorts of problems with weight loss after that, and water retention. So if a body is not digesting sugars properly, they are going to have a harder time losing weight, and therefore probably more likely to gain weight over time and have other hormonal disruption, because let's remember that insulin is a hormone, and any hormone can affect other hormones in the body. And a healthy body is a body that is in balance with all of the hormonal systems, so it can throw off other pathways for the body to lose weight and maintain a healthy weight over time. So with all that said, people who weigh more have higher risks for everything else. And they start on a high blood pressure medication. They start having issues with their heart because of the heart working harder and having that higher blood pressure. So we start looking at cholesterol medications and other heart medications. People who have diabetes are more likely to get Alzheimer's or dementia and other mental or nervous system related conditions, and there are costs associated with that as well. So as you can see, it can be a trickle effect or a web of other medications that end up getting prescribed under the umbrella of someone being overweight and diabetic. Fewer expensive surgeries. So people can lose limbs, feet, eyesight, things like that as a result of diabetes. So if we can prevent the progression of diabetes, or prevent diabetes at all, at least specifically in the pre-diabetic stage, then that can definitely help avoid expensive surgeries, which was a cost in the system and a cost that the insurance companies would bear. So drugs like Wegovy may help patients avoid a gastric bypass surgery and other costly surgeries. Lower complications and risks. Long-term use of these GLP drugs may reduce the incidence of diabetes and related complications such as vision loss, limb amputation, kidney failure, which are very costly to manage over time. Cardiovascular benefits. Some studies of these medications may also reduce the risk of heart attacks and strokes, which could result in significant savings for health plans over time. Now, I'm going to give the argument for the other side. So the other side is more short-sighted. They're saying, that's great, we see the long-term effects. However, these health plans are priced over a 12-month period. Health plans adjust their rates typically every 12 months, and evaluations and revisions are made on a quarterly basis. These are finance companies. These are built like banks. It's all math based. It's all numbers in, numbers out. How much money are we bringing in and how much money are we spending on claims, and then forecasting costs. So by looking at trends over the last, with this specific demographic, this specific group of people, we see the cost is $100,000 for managing this group. What is it going to be over the next 12 months? So many actuaries and underwriters are tasked with forecasting what costs will be in the future. And when medications are added to those costs, especially a new medication, it is difficult to predict how many people are going to jump on that medication. And an additional $10,000 a year per person is a big number. And it makes these actuaries and underwriters very nervous. What if they underestimate? And what tends to happen when these projections are made, there may be several projections made and several ways of calculating such projections. Actuaries and underwriters tend to err on the side of caution and go to the worst case scenario. They don't know if 10% or 100% of the people are going to take the medication. Now, it is ridiculous to say that 100% of people are going to just jump on this and take it. So let's say they released all requirements, all of the pain in the butt pre-authorization processes, and allowed anyone who wanted this to take it. Would 100 out of 100 people jump on the bandwagon and start spending $1,000 a month on the medication? No, it's never 100%. Nothing is 100%. Nothing is 0%. Most actuaries and underwriters will agree that nothing is 100%, nothing is 0%. But where is it in the middle? It's usually somewhere in the middle. Everybody agrees on that. But the difference between 1% of the population taking a medication and 75% or 60% or 50% taking the medication, those are two very different numbers. And they worry that it's going to fall somewhere between there and they're not going to be able to predict it. So putting these loops and hoops and jumps and obstacles in the way of people getting a hold of these medications helps them control the percentage of people that are going to jump on. So, like I said, it was being obese according to the BMI scale. Now, the BMI scale is not perfect. We all know this. I mean, there's bodybuilders that have 5% body fat that are considered morbidly obese. We know that that is not the case. That muscle is different from fat, but it is a generic way for these insurance companies to set a bar, set a precedent for what they will and will not cover. Because these insurance companies are on the hook for 12 months, they're not looking at what is the cost of this patient in 5 years. They're looking at what is the cost of this patient over 12 months. And if this patient is overweight and they have not been on one of these GLPs and then they jump on, that's a new $10,000 a year, or just about $1,000 a month that the insurance company then has to bear. And so let's all keep in mind, I know I keep talking about insurance company costs. Insurance companies, as I said in a previous video, their margins are not crazy high. I mean, their margins are usually somewhere around 3 to 5%, That's usually about what they aim for, and in many cases that's what the law requires. The law requires that a certain percentage of the money that the insurance companies collect goes to claims. So, highly regulated industry, if the costs go up, it's not like the insurance company is going to say, oh, don't worry about it, consumer. We are just going to be good people. We believe that these medications are revolutionary and we want you to be healthy, and we'll just go ahead and absorb these costs. No, their costs go up $1,000 a month. Your cost goes up $1,000 a month or $50 a month to pay for that medication. So do we all want to pay an additional $1,000 a month eventually if everybody is on this medication? No, not really. So we want people that need these medications to be on them, and if they're working, I think we all collectively want healthier neighbors, healthier humans around us, and we all want everyone to live happy and productive lives. For the most part, if you're a good person, that's what you want. However, can the system bear it? Can the market bear it? Can people afford to pay $1,000 more a month? And how can we spread that across the board for everyone to be able to, I'm not saying everyone's going to take this. Like I said, I'm just being hyperbolic to make a point. So that is the short-term cost burden for the healthcare system, and why many insurance companies are in this short-term camp, where they believe that these medications are too expensive for them to bear for people that are obese, and they've push this category into morbidly obese to help reduce costs for themselves in these medications. So I'm going to continue to go through why insurance companies aren't covering this, and maybe some other options that you might have, and at least research for yourself to see if they are viable options if you need medications like this. So cost versus adherence. Studies show that many patients discontinue GLP drugs early, leading to minimal long-term health benefits. So many of these insurance companies are arguing that as much as 50% of the people that try these medications don't do well on them. So now they've invested $5,000, let's say, in this person trying this medication and it didn't work. So how much are they willing to invest in order to get the long-term health benefits? So if 10 people try it, that's $100,000, and 5 people start the medication and don't get the long-term success. Now they've invested $100,000 and only half of them are going to continue on the medication. And that's the other thing, is that many people think that once these medications are working for someone and they lose the weight, they're more likely to continue on the medication. So people are speculating that once someone is on this medication or a medication like this, they may have to take it for a very, very long time, and that we're going to have to figure out a way to reduce the dosing appropriately for people, and therefore reduce the cost appropriately for people that need to be on this for a longer amount of time. Restricting coverage. Some insurers like Blue Cross Blue Shield of Michigan have already limited or are removing coverage for these drugs altogether unless they are prescribed for specific medical conditions like diabetes. Avoiding the whole weight loss category, it sounds like, altogether. North Carolina's state employee health plan, for instance, have stopped covering GLPs altogether for drug weight loss due to rising costs, projecting potential expenses of over $1 billion by 2030. So the overall debate here is whether the short-term costs outweigh the potential long-term savings in healthcare expenses. Some insurers take a wait-and-see approach. I'd say pretty much all of them at this point are taking a wait-and-see approach and trying to cover it as minimally as possible, while others are proactively restricting coverage due to the immediate financial burden. So if you would like to look at some alternatives, dive deeper. Again, I'm not a medical professional. I'm not a health professional. I'm someone who knows the insurance industry. I'm an insurance professional. I've been working in insurance for 20 plus years, and I understand that system more so than the body. But there are also some companies that are coming out with these GLPs and creating them in a compound pharmacy rather than the brand names. So the brand names are the Wegovy, Ozempic, and Mounjaro. And there are companies out there, again, I'm not sponsored by any of these companies, but Hims, Roman, and Sesame that advertise GLP medications similar to Wegovy, Ozempic, and Mounjaro at a significantly reduced price, somewhere around $200 to $500 a month. So something that you may have to finance on your own. You may not get any help from your insurance company, but if you need to lose weight and these medications are working for you, it may be worth a discussion with your healthcare provider to see if there are other ways of getting a hold of this. So these are telemedicine platforms that have more affordable pricing, because it sounds like they have found compound pharmacies that will create these on their own and reduce the costs. So some things to keep in mind here is that obviously if you're getting it from a compound pharmacy, you want to make sure that you're getting it from a source that is reputable, right? There can be additional risks for using these smaller pharmacies, and there's some controversy around that. So do your own research and come up with your own conclusions around that. Other people say it's fine, and the compound pharmacies themselves are pretty highly regulated from what I can see. Of course, there was a time where these compound pharmacies were not highly regulated, and they have gotten away with a lot in the past. For example, one claim I worked on specifically, there was a compound pharmacy that was saying that they were providing a very specific medication to a very specific patient, a very expensive medication, and they were not providing anything at all. They were just collecting money from the insurance company. So sometimes these smaller pharmacies have gotten a bad rap over the years. However, I think a lot of that has been cleaned up because insurance companies know what to look out for, regulators know what to look out for, and patients are certainly more cautious. But it's something that has happened in the past, and there's some shady stuff that has happened before within compound pharmacies. Compound versions of the semaglutide. The other thing to keep an eye out for is these are, from what I understand, peptide-related compounds. And I know that it seems as though, I don't know this coming from the pharmaceutical companies, but I would guess because their incentive is to protect their profit. I mean, they're getting $1,000 a month for these medications, and they want to continue to get $1,000 a month for these medications. They probably don't like these competitors, these pharmacies that are competing with them and making similar compounds on their own. They don't like that. They don't like the decentralized model, and they want to control that. So I think what they're doing is they're trying to limit access of peptides altogether to people. And because peptides are very natural, a lot of people know how to make them even on their own with a little bit of education and lab experience. So they don't like the freedom of people being able to manipulate these very powerful peptides on their own. So it seems as though many states are getting pressured to make a lot of regulations around peptides. So just keep that in mind as well. And this may all be dependent upon your state. One reason these companies offer lower costs is by providing compound versions of the semaglutide. Compounding involves a pharmacy preparing custom formulations of medications, which can be less expensive alternative to brand name drugs. Compounded drugs are legal when prescribed by a healthcare provider, but they aren't FDA approved in the same way as an original branded medication, right? There's a whole process the FDA puts before these pharmaceutical companies before they can brand a medication such as Wegovy or Ozempic, versus someone just making it in their own pharmacy, an independent pharmacy. Another reason why these smaller pharmacies are more efficient and are able to offer such lower costs is because they have lower operating costs. Telehealth platforms such as Hims, Ro, and others often have lower overhead compared to traditional healthcare settings. They save on expenses like space, administrative staff. Additionally, online consultation model allows them to operate more efficiently, sometimes passing those savings on to the consumer. So again, they will price according to what the market will bear and what people can afford. Otherwise, they wouldn't be in business. So that's the kind of argument for this decentralized model of healthcare and deregulation around healthcare, aside from making sure that they're selling what they should be selling and they're not poisoning people and they're working in a safe environment and not having any bacteria and weird stuff. They're working in a clean environment and so on. Then this health, so this, one of the good things that came out of the pandemic is this deregulation around healthcare and remote healthcare. So these providers are able to operate in states and in areas that are less expensive. So if you live in a expensive area like Beverly Hills or Manhattan in New York, your healthcare provider is going to have to, if you're going into an office, they're going to have to charge you more money because their rent is higher, versus a doctor that is working with you over Zoom or working with you over the phone, this telemedicine way of getting medications. They could be in Ohio. They could be in the backwoods somewhere on a, in a cheaper area and not have to pay that overhead, or operating in a state where taxes are lower, operating in a state where rent is lower, operating in a state where their insurance is lower, their insurance for doing business and purchasing liability coverage may be less expensive in the state that they're operating in. So all of that can be passed on to the consumer. And during COVID, a lot of regulations around prescribing medications over the phone were lifted because of the health emergency. I mean, it really made sense. If you're afraid that you're going to contract a virus when you go into the urgent care emergency room, it's a lot better to talk to a doctor over the phone because it's contactless, you're not spreading your germs and all of that. So it really made sense. One of the things that the regulators did do that made sense was reduce the contact of already sick people with other sick people in an emergency room or urgent care setting, and allowing doctors and healthcare professionals to prescribe medications and do consultations over the phone, and also doing it interstate. Before COVID, if my memory serves me correctly, in California and other states, doctors were not allowed to prescribe anything over the phone. Yeah, you could have a consultation over the phone, but the doctor wasn't able to really do anything. And after COVID, the doctors are allowed to operate across states. So you can call in and with making the telehealth platform a lot easier for businesses to operate. So if you're a telemedicine provider and you want to offer services to someone over the phone, before COVID, you had to have doctors in each and every state operating independently in that state and following very specific guidelines for each state. After COVID, those borders were lifted, and now, like I said, someone in Ohio can treat someone in California and prescribe them medication, of course, as long as they are licensed to do so. So again, really making this model a lot make more sense as far as lower operating costs. Subscription models. So companies like Hims, Ro often bundle costs of medications with online consultations, making it seem like you're paying a single flat fee, maybe $100 per month. These subscription models allow them to spread out the cost of the medication over time, creating the appearance of lower monthly costs. So the subscription model is definitely one that is something that companies really like. It allows their cash flow to be consistent, and sometimes people use the service, sometimes they don't, but it's available for people, and it's a way for them to pay over time rather than one big chunk. It's a lot easier for people in America to pay $100 a month than it is for them to pay $1,000 up front. Risks and considerations. Quality control. Like I was talking about before, while compounded medications can be more affordable, they don't undergo the same rigorous testing and approval process as the FDA approved drugs, which can raise questions about their safety and effectiveness. Insurance coverage. When going through these online platforms, these medications might not be covered by your insurance. So if long-term treatment is needed, the overall cost could add up compared to what you pay with an insurance plan. If you're considering this route, it is important to weigh cost savings against potential risks. So I've provided links to several articles down below if you have more interest in where some of these studies and some of this information that I'm talking about is coming from. A lot of this information were from the links provided below, and also from my personal experience of working in insurance of over 20 years. Again, I'm not a healthcare professional. This is not healthcare advice. This is not healthcare advice. And talk to your doctor if you have more questions about these medications. And with that, thank you for hanging out until the end. I have some links down below if you are interested in working with me as a business owner or a executive decision maker within your company, such as an HR manager. There's a link down below to schedule a free meeting, free consultation with me to see how I can help or if I can help. And thank you for hanging out until the end. Hopefully you found this useful. Share it with someone who you believe would find it interesting, and we will see you next time.